Don, this sort of rolling real estate apocalypse has not happened. It has not come upon us yet en masse. Certainly some buildings. You and I have talked about this a lot. Right now, can you figure out the value of a building? I read an article this morning that one of the problems is that nobody actually seems to know what a lot of these buildings should be worth.
Well, I mean, I just heard Richard's comments, and Richard's a good friend. I saw him last week, and he's certainly very pessimistic about the market. I'm pessimistic about office buildings as well, but I don't think that the reason we're not seeing activity is because people don't understand value. I think we've got a good handle on the value of many of these buildings. If you operate from the perspective that office occupancy has changed forever until something else shocks the system, probably decades from now, we're going to have a hybrid workforce. And so that has had a major impact on office buildings. But this is different, by the way, than, say, the early 90s, because the banks don't have over leverage. They are at 60% of the values of those assets when they made the loan. So they can take a 40% hit in value and not be hurt. It's the equity that's wiped out, and it's the mezz lenders that are wiped out. And the banks just don't want to deal with all of these headaches. They were hoping things would change. They're not. So I think we'll begin to see more asset sales happening mid-year into the third quarter and fourth quarter, where we'll see a lot of activity, I think, in terms of commercial office buildings.
I heard a crazy story from a good friend of mine, somebody you probably know, but I won't say his name on the air. We could talk offline. And he told me a story which I thought was insane, but I can't prove it. You probably can, which is he was telling me the story about in New York City, a building, and let's say it was bought for $700 a square foot. Okay, it's somewhere around there. And it's in distress, and they just sold the building for like $350 a square foot. So the building was sold. The guy that bought it lost basically half his value. But in the real estate transaction, New York City valued the building at $703 a square foot, even after the sale at half its value, because they have to pretend this is not happening for tax reasons, for tax revenue reasons. Is that possible?
Yes, it is. In fact, I started in the real estate business as an appraiser and a consultant, and I built and owned the largest property assessment appeals business in Washington, D.C., and we prospered in the early 90s because the government was refusing to recognize that the massive decline in commercial real estate that took place. And so what's going to happen is the governments are going to force property owners to sue them and appeal their assessments and sue them to get their values lowered. And that's because they cannot afford the massive revenue loss. D.C. alone is going to be down $400 million in property tax revenues this year alone.